For more than a century, the Swiss banking industry has been considered the safe house of the world, a place where the secret assets of the wealthy, politicians, corporations, and even the most impeccable institutions are kept. With its neutrality, near-absolute banking secrecy laws, and the reputation built through the system, Switzerland is not just a country, but a symbol of global financial stability. But what happens if that symbol collapses? If the banking system that created the world of dreams disappears? And let's find the answer to the question, what if? A catastrophic event could trigger the collapse. Imagine a coordinated cyber attack simultaneously crippling every major Swiss bank, the digital equivalent of a Swiss Army knife suddenly becoming utterly useless. Alternatively, a court ruling forcing the release of all client data could spark a global panic, with investors fleeing like startled squirrels. Or perhaps a series of unforeseen economic shocks might expose hidden cracks in the Swiss banking system, causing a domino effect of failures. Any of these scenarios would be a financial earthquake, shaking the foundations of global trust in Swiss banking. The immediate aftermath would be catastrophic. Global financial markets would plummet as investor confidence evaporates. News of the collapse would trigger a panic, leading to a mass exodus of funds from Swiss banks. This sudden and massive outflow would create a severe liquidity crisis, potentially crippling the Swiss economy and triggering a domino effect on other interconnected financial institutions worldwide. Governments would scramble to implement emergency measures, such as interest rate cuts and bailouts, but the sheer scale of the crisis might overwhelm their capacity to react effectively. The initial days and weeks would be defined by chaos and uncertainty, as governments and central banks struggle to contain the fallout, leaving ordinary people facing the prospect of financial ruin. The collapse of the Swiss banking system wouldn't be a localized event, it would be a global catastrophe. The immediate impact would be devastating. A severe global recession would ensue as international trade and investment grind to a halt, creating widespread economic hardship. Currency markets would become incredibly volatile, potentially leading to hyperinflation in vulnerable regions. The world would witness a dramatic shift in the global balance of power, with new financial centers rising to prominence and reshaping international economic relationships. This would fundamentally alter the geopolitical landscape, potentially escalating tensions between nations vying for financial dominance. Existing international institutions and agreements might weaken under the strain, necessitating a reassessment of global financial regulation and cooperation. Ultimately, the world would be left grappling with a new and uncertain financial order. The collapse of the Swiss banking system would necessitate the emergence of alternative financial structures. The current system, heavily reliant on Swiss secrecy and stability, would leave a vacuum. Potentially, we might see a rise in decentralized finance, DeFi platforms, leveraging blockchain technology to offer transparency and security without reliance on centralized institutions. This could lead to greater financial inclusion, as access wouldn't be limited by geographical location or stringent banking regulations. However, DeFi's inherent volatility and susceptibility to hacking remain significant concerns. Alternatively, regional financial hubs might gain prominence, creating a more multipolar financial world. This could involve strengthened regional banking unions or the emergence of new, more resilient international regulatory bodies. However, such a shift could also increase fragmentation and competition, possibly leading to less efficient resource allocation and increased international tensions. The most equitable outcome would likely involve a combination of these alternatives, fostering both decentralization and robust cooperative regulatory frameworks. The resulting system's stability would depend critically on the success of navigating the inherent trade-offs between efficiency, security, and equitable access. The collapse of Swiss banking would profoundly impact ordinary people. Mass unemployment would ripple through Switzerland's financial sector and related industries, causing widespread economic hardship. Many Swiss citizens heavily reliant on the financial sector for their livelihoods would face job losses and financial insecurity. This wouldn't be limited to Switzerland. The global nature of the industry means job losses would be felt internationally in countries connected to Swiss banks through investment or other financial ties. Beyond job losses, the ensuing global economic turmoil would lead to increased social unrest and political instability worldwide. People would lose faith in established systems, potentially leading to protests, civil disobedience, and even violent conflict in areas already struggling with economic inequality. Finally, the crisis would severely damage public trust in financial institutions and governments, leading to increased cynicism and a demand for greater transparency and accountability in the financial sector. The bedrock of faith in institutions would be shattered, leaving a legacy of uncertainty and distrust. A Swiss banking collapse would trigger a global catastrophe, reshaping the world order. In your opinion, what if the Swiss banking industry collapses? Drop your thoughts in the comments.